Welcome to Markets Now. I'm Michelle Ruck along with Dwayne Bussey with Bolt Marketing. Some pressure in the grains this morning. We're kind of mixed over in the cattle futures with live cattle seeing maybe a little early pressure. Don't know if we'll stay that way. And feeders making some more new contract highs. We're mostly lower in the hogs. And Dwayne, let's start off with soybeans. A higher day there yesterday as soybean meal scored new contract highs. And we actually saw soybean meal back scoring new contract highs here overnight. And so why is the soybean market not following soybean meal this morning?
Maybe we just overdid it a little bit yesterday. That was a strong up move for a slow news day, I would call it. But I guess the news that I was reading or seeing across the news wires, Argentina's crop is smaller to quite a bit smaller than the average trade estimate. Now, tomorrow, USDA will release a monthly supply and demand report and of course, a global report as well. We'll see. They're expected to cut the Argentina crop size, but probably not as much as a lot of the trade estimates are talking about. Some people are talking below 30 million metric ton out of Argentina. And, our friend Randy Martinson last week mentioned that, the Argentina crop might be small enough that it brings down the total South American crop a little bit closer to last year's crop size. I think right now the crop's around 10 million metric ton, 15 million metric ton larger year over year, but that is significantly smaller than what we were talking about just a month ago, Michelle.
Absolutely. Plus, you got to believe we get some harvest pressure, Brazilian harvest pressure, Brazilian farmers selling when we get up to the upper end of this trading range. Plus, from a technical standpoint, we couldn't get above 1540 yesterday. So are we going to continue to consolidate under that level?
Yeah, I think we will. You're exactly right. You still got harvest going on in Brazil, therefore farmers selling on our board. The Dalian exchange in China was actually lower and has actually been trending lower. So the price there in China for soybeans is dropping while ours is still staying up at this 15 to 1550 range. So I'm thinking the same thing most traders are, that soybeans could probably use to be sold against that 1550 resistance, and you can use that as a stop if you want. So I think that's why we're seeing a lower soybean market trade this morning. There's just more sellers willing to sell it against that resistance because, like you mentioned, I don't think we have that bullish story or that confirmation of the really small crop in Argentina to push through 1550 right now.
Yeah, we'd probably have to get below 30 million metric tons for that to happen. All right, so the corn market yesterday could not follow soybeans. In fact, it followed wheat, which was scoring new contract lows. And so the corn market, where do you think we're going from here? Are we going to continue to maybe have a trading range now and go sideways like we had prior?
Yeah, possibly. I'm disappointed. After we had the sell-off last week, I really thought we could rally back and get to like a 650 mark for May corn. But boy, we struggled to do that here. We're inching higher, but the sharply lower wheat complex and new lows there seem to pull it down instead of following the soybeans higher, like you mentioned. I'm still hearing that there's these rumors that China's out there buying more U.S. corn than what the USDA sales flashes have been so far. We got a couple small sale flashes yesterday, which was almost maybe disappointing to the trade, and that's why we couldn't get up and run. But we had a good weekly export inspections number, so we're shipped more corn out. So, but like I said, I'm hearing that there's more purchases out there from China. So I'm going to wait for Thursday's sales report. Hopefully that's a better number there. We just need more demand, don't we? With the U.S. report tomorrow, they're more than likely going to lower export demand by probably 50 million bushels in tomorrow's report.
Well, we're behind 40% on the inspections as of yesterday's report, and I think, or at least of the exports here. So definitely that is a problem for corn. Okay, the wheat market, new contract lows, as we said. Is that because the trade believes that we're going to get this Black Sea export corridor opened or extended that deal?
I think that and a combination of some rains in Oklahoma probably put some pressure on the wheat market yesterday. But yeah, Cargill's announced overnight that they believe the Ukraine export corridor will be opened in the Black Sea or extended. I think March 18th is the deadline for the current agreement they have. And Cargill should be in the know, obviously. And obviously the funds are heavily short the wheat complex, and they're not worried about the export corridor being shut down. If they were worried, of course, they'd be getting out of some of these short positions. So evidently there must be some news out there that I'm not hearing that will get extended. But, in the end, it's going to come down to Russia, and that means Putin saying that he wants it extended. So, there still could be a spike in this wheat market if there's any rumors that he's going to shut that export market down.
Otherwise, the charts look pretty horrible, don't they? Below 8 on Kansas City and below 7 on Chicago now.
They really do, and we're still in this time frame for our markets that is kind of boring, and a time that puts pressure on these markets. We've got the crop in South America. Obviously, we're still questioning Argentina's crop size, but they're harvesting in Brazil, so there's your harvest pressure. Our markets, of course, we don't have a weather market yet, and until we have a weather market in the U.S., I think we struggle to get that rally. So we might trend lower in the short term, but I think we need solid support under these markets because, one, we have really tight old crop situations, and we do need to raise a big crop in the U.S. this year. And if we have any weather scares, fireworks will occur, I'm sure.
Yeah. Cattle market, feeders back scoring more contract highs here this morning, and that market has really been on fire here, hasn't it?
They sure have, haven't they? Yeah, feeder cattle just on fire. The cash market's on fire. Everything that we've been talking about bullish for over a year in the cattle market, the herd reducing in size, is finally coming to fruition here. But I am looking at like November 23 contract at $222 and going, wow, that's about $40 higher than where the Nov 22 board went off at. Maybe it is time for some producers to start looking at maybe put option strategies to put a floor underneath it and still have that upside potential. Because I do think, it's very possible to take out the all-time highs at 245 for November feeders. But boy, we're at some pretty nice prices, and with inflation fears out there, thinking we're going to hit everyone's pocketbook, that I'm starting to get just a little bit concerned. I'm still a bull, don't get me wrong, but these are really good prices.
Yeah, and I mentioned live cattle, a little softness on the opening, but boy, it seems like we have that on any given day, a little profit taking, and then, man, the funds just come back in here and buy and defend their longs, don't they?
They really do. That market's been overbought, but we struggle to correct the overbought condition. All we do is pull it down just a little bit, and somebody's right there to buy it. Now, being a bull myself and having some long positions, I'm just a little bit discouraged. We can't score even higher highs like on a trade like yesterday. When you watch feeders up $2 to $3, you'd think live cattle could go up higher than that. But there's nothing wrong with a steady bull uptrending market, and that's really what we have here in the fats. 166 in April. The nice thing about that is we're not that much higher than the cash market, so it's got support underneath it. Cutouts keep going higher. Ride it while you can, I guess. This looks like a stronger market. How high it goes will just really depend on the short-term situation from the packers if they really struggle to buy enough cash cattle here.
Yeah, and as you and I speak, cattle are starting to drift into the red here, but certainly nothing to worry about there. What about this hog market? It pretty much has been in the red this morning, which is no big surprise. Is the number situation or the premium to the index the main problem that you see with that market?
Yeah, those are both two big problems for the hog market. Everyone looks at the chart and wants to pick a bottom and think that it should rally back. And seasonally, normally this time of year, we see a decrease in production, but this year that's not forecasted in hogs. We actually see a little bit of an increase in production in this quarter. And therefore, I think the futures market still grinds lower. And we're actually at a pretty large premium to the cash market right now. So when I look at the April contract, I know you see a downtrending market and maybe I missed the boat. But at 83.5, I would still be bearish that market and think we could go below $80, I think, and meet cash somewhere around $78, $79 at expiration.
Yeah, and we can't seem to get any traction either in cash or cutouts. So that seems to be a little bit of a problem too. All right, thanks for joining us. Dwayne Bussey with Bolt Marketing, and that is Markets Now.